Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, October 12th. Good to be with you guys this morning at what seems to be a quiet start to the week, but we sure are trading at some key levels on some of these setups here. Jay, Steve, everyone in the room, good morning to you. Let's jump right in. So on the menu for today, DXY, Sterling, back at resistance essentially. Dollar CAD, crude, Aussie, dollar yen, gold, SPX, Bitcoin 10-year yields, and a note on the Kiwi. I actually don't have euro on the list because I'm not really crazy about it, but I'll show it to you real quick as the setup stands unchanged. Good morning to you as well. All right, so let's jump right in, guys. Most of you were in the webinar yesterday, I assume. We got the non-farm payrolls on Friday. The one note I didn't talk about, guys, is that we did see a contraction in the broader labor force participation rate. And while that tends to go under the table, that is attributing to the large contraction or large decline we saw rather in the unemployment rate, despite such a weak read on the NFP front. So mixed picture. All the focus shifts to tomorrow's core inflation data out of the US. So you have core inflation expected to come in at 4% for September, holding the inflation headline number at 5.3, again, multi-decade high. And then we do get the release of FOMC minutes, not expecting much there, but the inflation read, certainly in the environment that we're in right now, is going to be primary focus. So that takes center stage tomorrow at 8:30. So for the dollar, here's what we looked like last night. The basic focus, I don't want to beat this dead horse, but we've been talking about this resistance zone for some time. We've been testing it for the last 2 weeks. This is the third week we're testing 94.47, 94.65, critical resistance, nice pivot zone in price. And again, the longer dated slope in red from the 2011 lows, which we're still flirting with. We've made a couple of intraday, intra-week pokes above, haven't been able to make a single weekly close above this. So the onus is still on the bulls to get a close above this region to merit sort of resumption of the uptrend. Till then, our base case scenario holds, guys. We're still trading into uptrend resistance. You don't want to get super excited and load up extra on the long side because you are at uptrend resistance. I'm not necessarily interested in trying to fight this. Maybe some cute trades on the ancillary majors against the resistance range, okay. But this is a big pivot. 94.65, 94.47 breaks. This should be an accelerated rally. If it holds, again, you could get all of these weekly pullbacks after intra-week tests. So here's what the daily chart looks like. Again, on the dollar index, we're basically there again. 94.47, whoops, 94.65. The monthly opening range is taking shape right below that level now, giving us further poise, right, to kind of let this thing play out. Here's what the intraday chart looked like. And here's what it looked like into the start of the week. 93.96, 93.97, we had identified that on Sunday as the exact, one of my favorite Fibonacci confluences. I get excited every time I show you this, right? 2 equal legs off the high, 618 off the low. Perfect touch and go, right? So this is still big resistance. See what happens as we stretch into that 94.47, 95, 94.65 level here today. Questions on DXY? All right, now at this point, now that we've sort of made that drive, we can null and void this. The 618 does actually still remain intact because we haven't broken that high yet. But look for a reaction here in US trade as we open it up. Don't forget, inflation data tomorrow is going to be, I think, a major player for what we're going to see in near-term price action. Sterling, another one from last night. Here's the British pound look like. So nice rebound off of support, too clean for comfort. Here's what sterling looked like right as we opened up the week. We said, look, we're at uptrend resistance. Recall, I actually got stopped out. I told you on this yesterday, guys. I got stopped out on this. I was in this short when I wrote this on Sunday. Monday opens, just took me out. My high was just above, my stop was just above that high. It took me out and then tumbled, right? Yeah, it's pretty frustrating, but here we are. We did run right into the first level of support that we were looking at, the February low, 135.67, nailed the low. And here we are right back at the weekly open. We're essentially unchanged for the week at this point, with the weekly opening range having taken shape just below resistance. Now, a couple of things. Let me go back real quick. Here's sterling on the weekly charts. This is sort of where the story starts. If we've buckled below this upslope here, support, support, break, resistance, resistance, it would suggest you want to be really careful on the long side still. By my part, the 52-week moving average here has been a very, very nice pivot in price, and that highlights 137.17 as the breakout for this downtrend that we've been in off the yearly highs for sterling. Okay, key levels. So 37.15 on the upside for the weekly chart. On the downside, 34.94, which is the 2017 high we closed that we were following. So all the levels have been sort of tidy. It's just sterling, throw over resistance, false break of support, right back in it. Here's sterling on the daily chart. A little more telling. A little more telling. Here's the down slope. Again, same slope we were looking at on the weekly chart. Test of resistance, a break of that consolidation formation, now testing that bottom slope as resistance for the last 5 days. 1, 2, 3, 4, 5, 6 days, excuse me. So again, the yearly open, an objective level, 36.46, still kind of nailing a ceiling in this. So this could be very well a break of this consolidation, test of resistance, and move off. Something else might be up if we break above this, but the base case scenario below the yearly open is that you are below resistance. Now I'm going to require, remember 37, what was that, 37.11, 37.12, we just looked at the weekly chart was the 52-week moving average. Check this out, 37.20 is the 618 of the drop. So further confirmation that that's what we're going to need to breach to kind of validate a more important low is in, and we're on our way back to the upside. Not my favorite scenario, again, but that's the risk a breach above 37.20 would merit. On the intraday, oops, it looks like this. And again, here's what we look like on Sunday. We were looking at two embedded formations. You have the upslope here off the low. Here's the parallel catching the highs. You have another sort of possible bear flag formation here with this move just laterally. We actually ran right into that resistance. That's what clipped me, took me out of my trade. Here's the drop into support, perfect touch last night. Here's the rebound. So all things held constant, the weekly opening range is set just below resistance. And one thing I wanted to highlight is that I didn't these lines that I've dropped in here, these purple magenta lines, that's actually turned out being the 1618 of the range for this pitchfork that we were following. So when it broke the lows here, we were like, well, what's that? You know, do we drop this slope and come up with a new slope, or do we start with something new? If you add the 1618, it's actually exactly what caught the lows. That upper parallel converges on this near-term upslope as well. That's all at the weekly opening range high at 36.74. So look for a break of the weekly opening range here. The more it coils, the better the break. We do have tomorrow on tap GDP data out of the UK. Don't think it's going to be a major market mover, especially for the dollar crosses. Might move sterling a bit. We're expecting a 6.7 clip from a previous read of 7.5. That's on year. But the core inflation data for the US really is going to take center stage. All right. Questions on pound. Nice tidy weekly opening range taking shape right below the yearly open, the July low day close. You're looking for inflection, a breakout, a break below here. You'd likely see a quicker spill. 35 and 34.50 would be your first levels. On the breakout, I'm really hesitant to do anything on the breakout. So, you know, I'd want to see a clear above that 37.20 to really validate the resumption, but the September high still would keep you in this slope. We'll have to see how this pans out. I'm kind of I'm teed off. I got stopped out on that trade. I haven't taken anything since on this. So hopefully we'll get another opportunity to get on this pound. Questions? All right, that's number 2, but I think it was warranted a deep explanation here because sterling is definitely on my radar as one of my favorite moves here. Dollar CAD, number 3. Here's Loonie. Right at support. It's at big support. We're at massive support. Pay attention. Where do I start with this? So dollar CAD, I've been trying to stalk an entry on this. I think it's upon us pretty soon, but look at the level that we're at here. Here's what dollar CAD looked like last night. So, or this was tonight. This was into the Sunday open, excuse me. Weekly chart. Main focus on this confluence region of support 2462 into 2460. That's a 2018 swing low, and it's 100% extension from the decline off the high. 1, 2, 3. Very nice level. We're sitting there right now. You can see some nice pivots there previously. Watch the weekly close. Okay, momentum's right at 50, so you got no Momo pushing this in one way or another. We're looking for inflection off this zone. Daily chart looks like this, a little bit more, a better well-defined region. Again, there's that 100, same region, but there's that also that 50. That's the 50 of the advance off the yearly low, essentially the entire 2021 yearly range. That's the 50 line. We're trading in that zone between 2440 and 2477. Interesting. 100-day moving average is right there as well. If this break of uptrend support is legit, the risk is lower while below this slope. The whole thing is, even if we drop this consolidation pattern, if this break is legit, the measured move is like down here, even lower. But not too convinced for some reason. So here's what I'm looking at with dollar CAD. I'm just working off the intraday charts. The daily chart basically shows that we broke that downtrend, or that consolidation rather, excuse me. Here's the near-term chart. We're coming off of downtrend support. If we're gonna stage a rebound, even a correctionary rebound that's within the downtrend, this is the spot. If it breaks below this, Charada 2366, your next downside target. So I really think dollar CAD's at an inflection point. Looking for something to happen here. My ideal scenario is, again, you see a little bit of a rebound. My problem with that is that's requiring some serious dollar strength, and dollar's at resistance. I don't know if I want to buy a new dollar strength positioning up here. It just doesn't seem prudent. That's my problem with dollar CAD. That's my problem with dollar CAD. So even if it rebounds, it might be a shallow sort of, you know, at the end of the day, I'm going to treat this like a weekly opening range, like any other trade. So the weekly opening range is taking shape right above support. If this pops higher, great. You got at least near term, just to the upslope, 26 to the 38.2 would get you 26.20. But you're still in this downtrend, and we'll treat it as such unless we break that upslope, unless we break, excuse me, that downslope to the upside. So no data of merit this week for CAD. You know, we did get last week some interesting CAD employment data. It was a little bit stronger than expected on the actual employment change, but unemployment did drop as expected to 6.9%. So it was actually a little bit cheerier of a picture than the US was, which is why you're not too surprised to see that drop, right? That's CAD strength, dollar weakness. But here we are at technical support, and it's 2 equal legs off the high. So if it's going to hold, this is certainly a level of interest. Any questions on Loonie? All right, I'm stalking this guy. It's gonna crack. It's gonna crack at some point. Just want to make sure I don't miss it. Crude, as long as we're talking dollar CAD, why don't we talk about crude? Here's what the picture looked like into the start of the week. So the whole picture here was look for resistance, look for resistance, and look for resistance. And the major focus wasn't necessarily just because of this near-term chart. Remember, guys, everyone here, I know that you guys know this, but every other report is where I'll have stacked the intraday charts. Here are what the weekly looked like as we were closing out a couple days earlier on the 5th of the month. We had just marked that break above major resistance. The daily chart was coming up against uptrend resistance, near-term uptrend resistance. And the intraday was right at that slot. Fast forward, we ran into it, made a nice drop right into key support that held right back at resistance, and we've been grinding into this upper parallel. Here's what it looks like now for the oil trade. I'm still thinking exhaustion. Even on the exhaustion fight, it would be near term, but geez Louise, it's insane. Let me take you to the weekly chart real quick. Again, nothing says it has to turn, but 8 weeks up, ongoing divergence in momentum on the last 3 highs. The 2011 low week close, we eyed that one yesterday in the webinar, 82.84. Man, I mean, if you got them, hold them. New positioning, I'm not touching this one on this one just yet. Here's what the daily chart looks like. Again, haven't broken the slope on a daily close basis. Maybe this one has, but that near-term ascent in blue, here's what it looks like on a line chart. All right, higher high, lower high. So you have a divergence reference point. So it's above 70, so it's not the strongest. But man, I've been looking for these auction for a while. I just think this is a good opportunity. Jay, stop. Tell me there's a one. Did you catch a 1618 here too? What were your reference points? You're the king of the 1618, my man. I'm loving it. Drop the knowledge, friend. So depending on the wave count, and this is where I don't really like to get too liberal with it, all right? I mean, everyone's got a different interpretation, but here's a wave count that interprets this as sort of the first completed series on the way down. That's the 100 up there. Not sure which one you're looking at, but this is the original one that we were initially looking at. If I add the 1618, son of a gun. Well done, man. I'm so impressed. Yeah, you love the 618. Saha, I see that. That's excellent. Excellent work. Excellent work. It's the fib we've been watching, guys. Jay is just coming on the fibs we're watching, extending that 1618, and we keep landing gold mines. There's like 3 assets we found the 1618 in last week, right, Jay? Well done. And it certainly adds more conviction when it matches up with our slope and when it matches up on the broader focus that we've been in. So yeah, I still think there's the exhaustion. And every time you get it's and guys, you think I don't mean to harp all the time on fundies or anyone who's looking at the market headlines, but me and Jamie are big believers in the sentiment reads. And you see Jamie every now and then will drop fire, guys, when he looks at those crazy headlines, the dollar, death of the dollar, and all of a sudden dollar's at the lows, right? The sentiment extremes on the inverse side just screams out sometimes. And just as the headlines are now starting to say, whoa, energy prices and oil starting to rip, well, where the hell have you guys been? We've been ripping. But it's just that once it reaches that crescendo, that's when you want to start to look to clean up the table. All right, if we've been long crude, take a little off, get a little more protective on the stops. It's too widespread, right? You guys are always right, says Jay. I appreciate that. We're not always right, Jay. We try to be, but we just try to stay disciplined. And while we are bullish crude, you guys all in this room know, I've certainly been bullish energy since the start of the year. Again, from the geopolitical side to the administration side to the technicals, everything was pointing higher. At this point, we're at uptrend resistance. We've marked some divergence. Everyone's and their mother is bullish. I'm starting to get a little concerned, right? So long story short is, I'm not holding a long position on this. I would love to be, I wish I was still holding a long position, but would look for a corrective move to offer some new positioning. At the end of the day, if this buckles and breaks, it's likely to be a quick shot higher. I really don't have anything until like the 90s above here. The oil on the weekly does have 82.84, which was the 2011 low week close. Let me just take that with me. Oh, we have that here too. Okay. So yeah, watch these levels. Watch these levels. Let me add that 1618. Jay, you're nasty with it, brother. Loving it. Watch that 82.84 level. Big, big. 7-year high plus. Near-term support still 79.50. Yeah, still 79.50. Why? I know it says high day close. That's no longer the high day close, but it is the weekly open. So it's a level I'll continue to watch. We should just probably relabel that. So that's just weekly open support. Break below that would be an objective sort of trigger, an objective indication for at least some near-term weakness. But curb your appetite on the long side. If we see a breach above 82.40, hold on. Questions on crude? Okay. That's just number 4. I'm going to pick up the pace here a little bit, but I was so I've been watching this one and tracking it into the start of the week because I've been looking for this exact move. So let's see if this carries through. All right. Aussie. All right. So Aussie on last night's update looked like this. I wanted to give you guys a quick look at this because another one where we're looking for inflection at a major resistance region. So here's what Aussie looked like on the intraday chart. But before that, let me just show you again from the top-down approach. Here's what the weekly chart looks like. We've certainly come off a major support. We talked about this in the webinar yesterday, the break below this major key downslope that we recovered in back last in August, again tested last month. Here's the recovery. This is the major operative slope we just need to break below on a daily close basis. And it was just that one, slip. Whoops. Other than that, we're right off that range. So not too surprised to see a rebound here, but rally should be capped by 74.50. We're still heading lower. So that's from 1,000 feet up, right, on Aussie dollar for the weekly charts. Here's the daily chart. The daily chart has us at resistance right now, right here. And that's why I'm looking for another indication, another one of those trades where at the open, you're at resistance. So there's the downslope we've been tracking off the highs from May. Here's the 618 of that decline from last month's range. Looking for an indication here today. 2 points I want you to watch. A, see if you get a momentum close above 60. B, where price closes with respect to 73.60. So that's what's going to be, the tell for me on Aussie dollar heading into the close today. Now on the upside beyond here, you got 74.13. That's just a soft target, guys, at the 2020 September high, right? Nothing too crazy. But beyond that, you're looking at the June low, the 50% retrace. It's going to be a breakout if this breaks, but not till this breaks. Okay, here's what it looks like on the intraday charts. The level that's making me want to fade this, and I think we may have just missed it, damn it, is this uptrend. And again, the same key, hold on, divergence signal, okay? Higher high in price. Now this is a 2-hour. I'll show you the near term, it looks even better, but the higher high in price, uptrend resistance. If you're gonna get a kickback, this would be the level to look for. Now, if we just get a minor pullback, right? Just a minor pullback. Oh, the 236 comes in at this nice pivot zone. This is what I was looking at. So the swing low that we made last week's high, that's just 73.30. So it's running away from us now. But if, that was a good 40 pip stop against the high, it was a really well set position with divergence, right, into that high. It's in this week's price action. So looking pretty decent for an exhaustion trade. If this breaks lower, the major key support, an area of which I might be actually interested for to see for larger inflection is right here. Last month's open, which was a clear pivot in price, resistance converges on this week's open right here at 73.04, 73.13, this 9 pip range. Key near-term support for Aussie dollar. Remember what we always say, a breach of uptrend resistance oftentimes can be the sharpest part of the rally. So if this breaks, again, don't get cute with it. You know, you'd likely see 74.12, 74, 70s, even 75 handle pretty darn quick. Pretty darn quick. So looking for inflection, looking for some sort of play off this trade here today. Here's what the 30-minute chart looks like. There was the trigger, which did break. So, you know, it looks like we're getting a little bit of a kickback. At the end of the day, anything that you're on the short, if any of you are playing this right now, don't get overzealous. You know, there's nothing to push you through the weekly open or this major support or the weekly lows yet, with a lot of event risk on tap, specifically that major inflation read tomorrow. Okay, July low close looks pivot near term. Let's go back to the daily. You're talking about 73.28. So I don't know if you guys remember 73.28. I have it right here. I still have that post-it note on the wall. 73.28 was a level that we were talking about for like 4 months, right? It was, I can't even remember. What's the origin of it? Way back here, just a simple low from May, ended up being the August open, ended up being the August opening range low, ended up being, like you just called, the July low close. Absolutely. So I have 73.28 on there anyway. Definitely an interesting level to watch. And here it is. Did we not put it on here? Might have taken it off this chart, so let's throw it back on there. There it is. Kind of messy, but yeah, it's been a decent pivot. Questions on Aussie? Don't forget, again, Australian, I think we're, no, employment data. Yeah, do get employment data tomorrow. So after the US inflation data, it is on tap, so keep that in mind. All right, moving right along. Let's jump into dollar yen. Here's the abomination. It's number 5 and 6. Man. So the Ripperoo coming into uptrend resistance, what seemed like uptrend resistance near 113.40s or so. The daily chart has some room to spin on this, but this has been such a ripper. Here is what the weekly charts, let me take you to this first, showed. So huge breakout. And this is the dollar yen run that I always tell you, once you get it, if you're not in there in the break, in the initial break, you're chasing beyond. So here's what it looks like on the weekly charts. We're working with a different slope here, but a little bit more sharp, has been calling the lows. The consolidation that we got, that little bear or bull flag, you can call it, looked like for me just a near-term consolidation. Here's the pop, first hurdle, first breakout target, second breakout targets. It's 113.70. We just hit that now. Okay, 114.55 on the weekly chart into 114.92. That's the next major sort of key resistance zone on the upside. Past this, it's going to be the basic 2018 highs and a 786 from the decline off the 2016 highs. We're an overbought on the weekly chart. That can maintain status for quite some time. So, you know, don't try fighting this just yet, but what a move. Keep your eyes on these levels. So here's what the daily chart looks like. Levels here a little different, but broadly putting into focus sort of a different slope. This is the actual concerted low, high, low that we were working with. This actually ended up being the 1618 slope, again, that caught the lows here before the breakout. The pivot continues to offer inflection. That's why we continue to watch it. Right now, we're at the median line, just above 2018 high day close is 1387. So on the weekly chart, we had 1370. Here gets you 1387, so maybe a little bit higher, okay? But at the end of the day, if you're gonna find some sort of inflection, this would be about where you would start to look for it. Again, deep into overbought territory, and this can maintain. Look how long we stayed in overbought territory in that March breakout, right? Essentially the entire month. So it's not a reversal trend trade, but man, it is here. So yep, I already know about that one, Jay. The 100 off the September low is right there. I'm trying to keep the charts tidy here, but here we are once again at uptrend resistance. Watch out. This is where retail gets chopped up. We're coming into major inflation data, okay? And I want to take a segue right after this and show you real quick the 10-year, because that's also at a major resistance zone. So levels haven't changed. Levels haven't changed. We literally ran right into that, came off. Here we are once again, just shy of that 2018 high day close. Watch out. Looking for some inflection here. Let me tag on that extension. Two equal legs, perfect touch. Right on. Jay does it again. Ooh, that 112.65 also highlights the 2018 Open, but we won't double up. So open up that resistance zone a little bit. Okay. My OCD is killing me, so I got to get this right. But there we are. So again, it's the same trade that we're seeing on some of those ancillary, on the other breakouts that we've been looking at. Look at the divergence and momentum on the near-term chart. This is the 120. Here's the 60. It's the same signal. Look for exhaustion. Look for exhaustion. So that's dollar yen. Here is the US 10-year yield. So let me just take you really quick. I've been showing you this picture. Nothing has changed. Here was our last update on the 10-year. I'll show you gold in a moment. I think it was back here. Nope. Here it is. Here's our last update on the 10-year, guys. Look, this is insane. Insane. The big region of resistance we were holding below all throughout September and into the October open was right here at 152, 154 in yields. You had big resistance there. You also had the dominant trend line extending off the, not the actual year high, but the highs from basically March and May. We tagged it again last month. Here's where we were. If you break out, you expect an accelerated move. What's the first target? What is it? 162.3 on the upside. Here it is. Converges on the 786 of the decline. And we're right here right now. So, you know, it's one of those trades where you want to watch this in combination with what's going on in dollar yen. They might be the tell for us as we get into the latter part of the week. Okay, so that's a quick look at what the 10-year is doing. It's number 7. Here is gold, number 8. Snooze fest this week, but I gave Daily FX an update on this, so I just thought I'd rather I should throw in an update here. The big focus is on the critical support zone that we're sitting at in gold. 1738, 1747, the 618 of the drop. Again, this is just a random swing high from back here in 2020, but a major pivot in price over the last couple of years, or last couple of months, I should say. We're just sitting there. Resistance 1791, that's the breakout level at the 618 of the drop for the bulls to get back in control. So near term, here's the daily chart. Momentum, blah. Monthly opening range, blah, right? Nothing. You're sitting on the 618, but the monthly open is pretty tight between 1744, 1777. Breakout, 1790. Anything sub 1730, that's sort of breakdown. If you break below this, you're risking another run at the lows. So the bottom base case scenario is look to fade lows. We need strength above 1791 to bear the breakout. Okay, watch this 100-day moving average. Again, a nice pivot in price. Converges now also on this slope. Till that happens, here's what the intraday looks like. Completely boring. So tight weekly opening range. I'd like to see any losses be capped by 1744, a break above 1777. Objectively, that puts you on the focus higher, but still needs to clear 1790 to get the thrust for a move back up to the upside towards this 1825, 1800 in general. Likely to be a strong reactor to US inflationary data. So definitely something that's on the menu tomorrow as we head into the CPI report. Questions on gold? All right, number 9, quick look at the SPX. It's been, again, very, very clean, guys. I don't typically follow SPX quite as closely as Jamie does, but when the intraday picture has been clear, which it has been the last couple of weeks, insane, we've just been tracking it. So recall that we before this happened on the 6th, we highlighted this consolidation break and we said, whoa, watch this. If it does crack, the focus is on 47.28. That's key resistance, bearish invalidation. Well, the consolidation broke higher and it rallied, but didn't quite make it into that 618 before turning lower. So yesterday, we suggested watch for 2 levels of interest that are going to be critical to define this pullback. One is 43.48. The other is the 618 retracement at the drop, which converges on former slope resistance. Here's what happened last night. We drove right down into the 43.48, right down into that 43.30 level. Here's the rebound. So the question now becomes, where do we go from here? Is this a simple break of the consolidation resistance tested as support and we're back onto the horse? We're right back on? Or are we going to get a clip of that 100% extension that we talked about early in the week at 42.40? So let me take a step back. So again, for the weekly charts, guys who are long-term traders, who are in this for long term, they're crossing their fingers. They're still holding support. There's been no close below any upslope on the weekly chart thus far, but we're sitting there. So they're still trying to bear witness that there's, possible there's still possibility here for us to hold support. Daily chart looks like this. Here we broke the upslope, tested that as resistance, and drove lower. Our base case scenario that we've been talking about since the break is that we would love to see this complete 2 equal legs into that 42.40 level, maybe 42.12 for a basic 38.2 if things get really messy, but start to clean things up and look for a larger reversal there. We turned right ahead at the July low close. Here's where we are now. If you're not positioned right here in the middle, kind of tight, I don't want to kind of prompt you. Jay says, what, your SPX game plan is perfect. I mean, it played out perfectly in this scenario, and that's why, like I say, I don't usually get really in the weeds here with the SPX, but the price points have just been immaculate. So yeah, we pulled right back, get rid of this, don't need that anymore. This is no, is that still the low day close? This is still, okay, the low day close at 43.60. So if this holds, guys, basically the onus is still on this key resistance range. That would be the breakout. Now, one other rendition, and again, we don't want to get too in the weeds here, but look where that 100 comes in, right at that 44.91 level. Here's where the 618 comes in, right at that, ahead of that 44 level, 44.25, right? So you can kick this out a little bit. You can even take this slope like that, get a rider, get the picture. So it's I don't want to run with this yet, okay? But it's the possibility here. If that low, I mean, that's a perfect level for you to expect it. If this is going to hold, it still puts the onus on a break above here. And if it does stop traffic, once again, you have a confluence near 44.90s, which would be where your target would be. So I think it's pretty clear at this point. Ease your eyes on the downside. Anything sub 43.10 is terminal, in my humble opinion, for this rebound. You'd look for 42.40s and below. Or not below, we'd be looking for 42.40s. But it's all based on whether this is a more important low or not. So the initial reaction looks good. If you get exhaustion ahead of the 618 here at 43.92 today, then you're still in for the drive. But this is a great level. So the game plan from last night worked perfectly. If you're holding short still, I would lighten the load here because it's kind of a big level that we bounced off of. If we're holding short still, you want any recoveries to stop at 43.90s. If it gets beyond there, it's a good area to kind of bail on that position. All right, so that is a quick look at SPX. Any questions on this? Number 9. All right. Number 10, here is Bitcoin. So we are a slow drifter, but the levels have, again here, played out pretty well. Played out pretty well. The one thing I don't like is what's happening at this reaction range. So remember, we talked about 55,880 into 57, 112. That's basically the high day close, the high day reversal close. It wasn't a reversal. The high day close from May, and the 786 of the April decline. Excuse me. If this was a break, you see that held resistance for 4 days. If this is a break, I think we should accelerate here. We're technically an overbought. Didn't really charge or fuel a rally, so I don't really have an opinion here on Bitcoin. We're going to lighten the expectation for the immediate upside. Here's what the intraday chart looks like. It's a little bit cleaner, but not quite at slope resistance. I would have liked for that drive to get into the 59s. The high day close, again, topside levels. If you break this slope, you got 62,986 and 64,89. That's the record high. This is the record high day close. So just looking at this as a sort of student of price action, it looks, the exhaustion looks like it's there, but it's Bitcoin. So if you see a tumble in the dollar for some reason into the inflation read tomorrow, I just don't want to get any ideas here on Bitcoin, but it's at uptrend resistance, not too far away. Momentum has been diverging. Would like a shakeout, and I was actually encouraged when we saw that shakeout here on the 10th, but all things held constant, there's not really a setup here, even if you were to try to take something new. So hold them if you got them. If you're a longer term trader, this is noise to you. But topside levels of focus are going to be right into that slope, which is right around here. Let's just call it 59.40s. And then these are the major key levels on the upside, but just looking a little tired. So use some caution here. All right, guys, that's everything on my list. Do let me know if you have any other major questions or trade setups you want to review. Marchin, great to see you back in the room, says Michael. It's been a long time, and I know you didn't miss me because I made you look at ugly ones, but we need to catch up. Can you take a quick look at Pound CAD, Euro CAD, Pound Swiss, and Kiwi CAD. Marchin's back in the house, ladies and gentlemen. Welcome back, brother. Here's Pound CAD. So obviously, Marchin, since you last have been here, I haven't looked at these trades, but always down for a challenge. Pound CAD looks like this. So Marchin, this is the same setup that that I must have showed you last time you asked about this. And the interesting thing is that the levels actually are continuing to hold pretty darn well. 618 extension of that multi-year decline off the highs from 2020 give you 169.53. The uncovered gap from back here in May, which we just did cover, is 169.70. Okay, that's your yearly open. Interesting. Not the cleanest. So I don't really like this formation, but let's just see how the levels are panning out. Where are these fibs coming from? This is null and void. Oh, I did run up to the 618 there for a little bit, but let's just check that. What is this? Well, that's nuts. That actually caught the high. It's an extension from back here. Let's drop that. Interesting. So look, I have us at support right here, Marchin. Watch this close. Watch this close. Anything beyond here, I don't really think you want to work on these intraday charts with this trade. This is what matters. Why? This is 100. Well, it doesn't really matter. It's actually 100 off the immediate high, but I want to see what this extension looks like. But in the other facet, it's the objective yearly opening range low. It's the close low from back here in December, and it's the close low from back here in September. So you have that sort of symmetry there as far as a key level. If you break below 69.53, until you do, that's a key support. Here's your break target. Monthly open resistance comes in pretty close to that median line, basically looking at 70, 73. Does that help, Marcin? Quick look there on Sterling CAD. Interesting support. You're in oversold condition, so I wouldn't fight this per se, but definitely looking for some sort of pivot here. If you get the resumption, that's your move of support. I'll have to look at these, Marcin, as you come into these webinars again. We'll sort of recirculate and rework those levels, but I haven't looked at them in a while, so I'll go through these really quick. Euro CAD. You know, a lot of people have been asking about CAD yen. Have you been looking at that, Marcin, at all? Someone was asking about CAD yen yesterday. Actually, from the Daily Effects trading desk, one of the junior guys was asking me if I had any commentary for him. I didn't get a chance to look at it, but on initial touch, it's been a pretty precipitous decline. It might be a decent CAD or yen cross to look at. Here's Euro CAD. Man, geez. Hmm. Looks pretty good. Looks pretty good. I'll be darned. That's an exact parallel. Ah, pretty close. Okay. Let's do this. Bear with me one moment. I want to see what other slopes we have on here. This is just nonsense now. Okay, so that actually is the low day close here as well. Wow, right on there. So it's breaking, it looks like it's breaking through the median line. The other thing I wanted to show you was just a parallel of that slope. So let's take this slope, get an exact parallel, and take it to those lows. Wow. Touch, touch, touch. Deep and oversold. And this has to be what? Consecutive. Geez. You really pick them, Marchin. Great to see you back, brother. Consecutive count. Let's see how much. Wow, that's 10 days down. I don't think we've seen that since. Oh, actually, it happened last year. It was 11 days down. That actually marked the low, or 12 days down. Prior to that was 10 days down here. Not helping. What other scenarios like that? Man, you don't really have much to look at as previous instances of 10 days down, but watch that slope. Anything beyond 42.90 near-term resistance at the monthly open, that's 46.72 here. That's a nutty trade. Watch that. Pound Swiss. I literally deleted that chart because I haven't looked at it for that long. Let's take a look. Ugh. Well, range-bound conditions. Watch today's close. The only thing I would tell you is that if it actually marks an outside reversal and closes above that candle, that actually might be another exhaustion. Nothing here for me. Pound Swiss is a complete range. Kiwi CAD, a little more interesting. Your yearly open, right near the yearly opening range lows, actually. Yeah, I'm not a big fan of chasing these runaway trades, guys. They're so stretched. You're either jumping in chasing or you're trying to call a low. Both things I don't do in my own trading. I just stand clear of that. If you're holding the short on here, Marchin, look for the low. Right now, you're sitting on the essential low day close of the year from June. But like, what do you want to do? You want to try to call the low here, or are you trying to play this short? There's nothing on my interest at all here. Here's the 4-hour looks like. Yeah, super tight, super tight. You got a clean opening range for the week, but you're at major. Just keep your eye on this daily chart. This is big support. All right. Always down for a challenge, Marchin. Throw those on earlier in the session. Maybe we'll get a little bit more. I'll spend some more time on them in the weeks ahead. But definitely some interesting pairs. Not so much the Kiwi and the CAD. Not so much the Kiwi. The CAD crosses. So yesterday someone was asking about CAD yen, right? I don't know what to tell them about that. If I had said, oh, there's resistance here, they would have jumped out the trade for no reason. These runaway trades, guys, are not where we're going to make our money. If you catch them, more power to you. God bless you. Sit in them. But trying to get in line or trying just to catch this on this kind of mature run is not my forte. I just stand clear of these. So yeah, I get CAD yen. It's making the move. It's super exciting. It's in overbought, but There's no discipline trying to buy these guys. Zero discipline. There's zero discipline trying to call the high either. That's betting. That's not what we're doing. We're disciplined traders. Unless there's actual viable setup, it's just a runaway trade. So stand clear of those guys. Don't get sucked in. No, Twitter is gonna unload on you on these moves, as they have been in the weeks and the days in the past as things have run away. Look for the trades that are going to give you your best bet. So for the yen crosses, ain't no need to look at the extraneous ones. Dollar yen's we're coming into some interesting resistance. Let's watch this pair. CAD yen is a crazy runaway trade, but I don't need to follow that. Dollar CAD is at pretty big support. I can watch to see what this does here, right? So I understand we want to follow the volatility, but that's not what we do. We want to follow the setups. That's what we want to really focus the most on. Make sense? All right, so let me just wrap it up there. I'm just going to write these down so I can keep an eye on them for you. Marchin, CAD, and Sterling CAD. And if something comes up, I'll definitely throw them on the updates as we get through the week, okay? Best of luck trading. Stay nimble. Into tomorrow's event risk is going to be the major topic that everyone's going to be talking about, this inflation read. We're expecting, all things held constant, core inflation to hold 4% and the headline read to hold 5.3. Want to see this transitory thing starts panning out. Doesn't look like it will. Pay attention tomorrow, 8:30 Eastern. I will see you guys on Wednesday for the free session with IG. I know it's a packed room, guys, but I try to look for your names, so definitely feel free to reach out on that one. That's at 9:30 on Wednesday, and then we'll be right back here, full session Tuesday and Thursday next week. Best of luck trading. I'll see you then. Cheers.